Welcome to Do the Top Podcast. This is a real estate podcast that teaches regular people how to invest in real estate. If you are trying to invest in real estate, you have come to the right place. I am your host, Ibrahim Ojerinde. And my co-host is Ahmed Lawal. We are committed to making real estate investment seamless as much as possible. So if you are looking to learn and invest in real estate, you are in the right place. Keep in mind, this is not a get rich quick scheme. You will have to put in the work, and believe me, things will fall in place. Ahmed, how are you doing today?
I'm doing great, Ibrahim. Thank you for the opening introduction. So, guys, like Ibrahim said, this is not a get rich quick scheme. Honestly, if you are looking for today money, it can happen in real estate, but I would say real estate is not the best way to do that. So we want this to be an interactive session. If you have a question, you have any constructive feedback you want to give us, please drop it in the chat on any platform you are watching us from or listening to us from, and we are going to treat it and answer your question right away. um, the only thing that we ask back is please like, subscribe, and comment on our videos so that we can reach many audience. Today topic is going to be really about lending generally, and we have an important guest for you. It's not going to be me, it's not going to be Ibrahim talking to you today. So if you are having any question, really anything really related to lending in real estate, you might want to stay tuned today, because we have someone that have a very vast experience in lending, home purchase, anything that comes with lending in real estate, that will be able to answer your question live. So without further ado, Ibrahim, do you want to introduce our guest so that we can bring him on?
Yes, today's gonna be very exciting, and I hope everybody you are here with your pen and paper because we have a
Yeah.
knowledgeable, one of the long-standing lender in Indiana. I mean, they've been doing this for years. Particularly the person I'm about to introduce to you,
Yeah.
he has been he's been a lender for over 25 years. So he has the experience, the knowledge. He's very resourceful. Is one of the lender that I can vouch for. I can tell you he loves what he does. So even if you're not ready to buy, calling him, talking to him, you will feel like you have gained, a lot that very day. Like because he's very detailed. It will explain to you how you have to go and all the do's and don'ts. That way you can qualify for your mortgage. Everyone in everyone that I've talked to and asked about this person, they always said they are lending company in particular. They have been serving the people of Indianapolis and Indiana entirely. They've been doing great. So I'm about to introduce this person. I hope you guys are ready. So today we have Andrew Franklin. He's here with us. His company is Langdon Mortgage. I'm gonna let him tell us all that. But Mr. Andrew, how are you doing tonight?
I'm great, and thanks for having me, and thanks for that introduction. That was probably the best introduction I've ever had.
Thank you, sir. You deserve that. You and your company, you guys have been making impact. So we really appreciate you in our immigrant community. Thank you.
Well, it's interesting. I joke that a company that's owned by a couple of old white guys has really found a niche in helping the immigrant community, and we love it. it's been the best thing that I think has ever happened in my career. About 2 years ago, I got a loan done for a Nigerian family that the builder couldn't get done, and the word spread. And I think we did over 100 loans for that community last year alone. So it's been a great ride, and it's been something that I've thoroughly enjoyed, because that's really where you see the most excitement. You know, somebody that's buying their third or fourth house, you don't get that. But when someone's new to this country, has worked hard, and makes that dream come true, and you're able to help with that, it's just a great feeling.
Yes, yes, and we appreciate you, honestly.
Well, I love doing it. And as you said, I'm with Langdon Mortgage Company. We were started by Greg Langdon. He and I are co-owners of the company. We'll be celebrating our 30th anniversary in March of next year. So not only are we local, but we've been here for a long time. We've been at the same location at 96th and Meridian for the entire time. I think we're the only locally owned mortgage company that made it through all the fallout in 2008. Everybody went out of business but us, and I'll give Greg credit for running the company very smartly. His dad was an accountant, and I think Greg has a lot of that in him as well. And he kept us afloat and going through that. I think one of the things that, you know, I could work at a number of different places, but the one thing that I really think that gives us an advantage is being locally owned. When you go out with a buyer to put in an offer on a property, the selling agent, they know our name, they know our reputation. When they're, you know, I've had a number of cases where the seller will take my buyer's offer for less money because the other offer came from some online lender that they didn't have confidence in. So working with someone that you know and trust that's locally based is a big advantage in this market, especially with limited inventory and oftentimes multiple offers. I think that really gives us an advantage.
That's good. So briefly, can you kind of give our audience some, you know, meaning, or what is lending it all about? Like, can you just give us an overview of lending?
Sure. Well, you know, unless you're able to pay cash for a house, you're going to need financing in some way. And typically that's done by a mortgage, a residential mortgage, which is a loan that is secured to the property. So you're responsible for making the payments on that loan. If you don't, the bank can foreclose on the home and take it back. So you're pledging that you'll make those payments. In lending, there's a number of subcategories. There's different programs. There's FHA, there's conventional, there's USDA, VA, if I didn't mention that. So what we do is we talk to the client and we find the best program that's suited for them, their particular situation, and match them with that and try to get them approved for that loan. There's a number of complicated guidelines that go along with lending, and they vary depending on the program. So different programs have different things that you have to meet criteria to get the loan. But we're experienced enough to kind of guide someone down the path to the best loan program for them and what they qualify for. We gather their information, we submit it to underwriting, we help them gather up the conditions, get an appraisal done, and then take them hopefully smoothly to closing. That's pretty much the process in a nutshell.
Ahmed.
Yeah, thank you for, explaining lending to us. Actually, when I was posting this video, I wrote about, every business need funding, and that is not an exception for real estate as well. So in real estate, you need funding. And just like you mentioned, except you have cash to pay, you will need some sort of lending to push the deal over the line. So what I'm trying to ask here is, what do I need? Let's say I want to come to you for help to get funding. What do I really need to bring forth for you to be able to help me?
Well, it depends. I'm going to go off topic for a second. I'm a fan of your podcast, and I know you had one episode where someone came in and talked about creative financing, and that has its place, obviously, in the market. I'm in the traditional funding world, and that's kind of your standard typical mortgages, and that's where a lot of people start. I think people move into the creative funding arena when they're unable to get more traditional mortgages. Either they lack the cash that's needed with each transaction, or they have too many properties to be able to get a traditional loan. There's limits on how many you can have. So really the first thing that someone needs to do is call me, and call me sooner than they think, because there's often times where we need to do some things with helping someone raise their credit score, or they need a little bit more for the investment than they anticipated. And the sooner you start, it's like everything. The journey always begins with a single step, and that first step needs to be calling and getting a plan in action and putting it into reality. And that really, other than calling your real estate agent, you should be calling a lender as soon as you start thinking about buying a house. What we'll do is typically talk to the person, find out what they hope to do, what they'd like to do, find out what their particular situation is. We'll pull credit, we'll take an application, we gather that information, we run what's called automated underwriting, which gives us a yes or no answer. And if it's yes, great. If it's no, we look at what do we need to change to make this happen, and we put them on the path to that. So sometimes it takes a little while, but oftentimes we can move forward right ahead. But again, talking to me as soon as possible is the best thing to do. We, through that process, decide what loan works best for them. You know, it might be, for example, if someone's credit, oftentimes with the immigrant community, Ibrahim, as we've talked about, they've not been here long enough to have the opportunity to build a deep credit profile. So their scores aren't sometimes as high as they could be. So in that case, maybe FHA is the best way to go, because it has less negative adjustments to the rate based on credit score. If the credit scores are strong and perhaps they've got a larger down payment, well, then we'll go to a conventional loan, which allows them to get out of this thing called PMI, which is private mortgage insurance. Not to get too involved with it, but everybody's got a certain situation that works best for them, and we find that and put them on that path. Now, as far as specifically the information that we need, you typically need to have a job, have qualifying income, as we call it. They prefer to see a 2-year history, although we've gotten pretty good at, if someone's been here a year and a half and then they have work history, for example, in Nigeria, that I can document and present to the underwriter, we can use that for covering the full 2 years. So that's one thing that I've noticed a lot of lenders won't do loans unless you've had a 2-year work history here in the United States. That's not what the guidelines call for. You can document work history in other places. But need to have a job here, and we verify the income. It's great when it's a base salary, but oftentimes we have clients that have a base salary and then work a lot of overtime or work a second job. And then for that, typically they say 2 years preferably, but you can use 1 year of overtime income. If you've got a history of that, then we can put that into the mix for qualifying. So really just need to find out the work history and immigration status. It varies depending on where someone's from. Typically what they call for is the right to work in the country, which oftentimes is an EAD card. And so, and if it's expired, there's been a lot of issues of getting them reapproved quickly. If it's expired or is going to expire, as long as the application has been made to renew it, then we can move forward with that. That's another thing that a lot of lenders don't realize, that we've kind of become an expert on through all of the loans that we've done, is how to get these done when a lot of other lenders don't understand them.
Thank you for that. Very explicit explanation, and it's very clear to our audience. So, I mean, you've talked about all this, but some our audience would like to know, what are the things that if they do it, or what are the things that if the person has not done, that may be a problem or be a reason why you and your company might say, for now, I'm sorry, we can't do it, but this is the plan. If you follow these guidelines, we'll be able to do it maybe 3 months, 6 months, or 1 year time from now. So what are the things our audience would like to know, that please?
The main things I see, I mentioned credit score. That's always something that needs to be built. I think a lot of people, especially when they're new to the country, think, well, I don't want to take on too much credit because that could hurt me. But really, the formula that calculates your credit score looks for what I call a sweet spot. So if you only open one card, it won't build your score as quickly as if you have 2 or maybe 3 what we call trade lines. So you want to build a robust credit profile, but not go overboard. Don't open 10 credit cards, but get a couple things actively reporting. So lack of credit is one thing that we find is a challenge. And then also income. A lot of times we'll have clients that come to us and they come here and they get that first job, maybe in the United States, the first job here, and then 3 months later get an opportunity for another job that pays a little bit more, and then another job that pays a little bit more. And a lot of times they're even working a second job during that time. But what we find is with changing jobs too often, that can present a problem. So work stability is something that really helps. Don't jump jobs for a 25-cent raise when you're looking to buy a house. Stay with that job, work the overtime hours so that we can count them. Because if you move to another job, if it's a different field, we may not be able to count that income, that overtime income anymore, and you're reduced back to the base pay. Whereas if you'd stayed at the original job, I could throw the overtime income into the calculations as well.
Great, Mr. Andrew. That's happens to me once before, and I have to learn it the hard way. So I have to actually wait for another 1 year just to get that fixed. I wish I had known you by then. Maybe I would have find a solution to it. But my question will be, every lender like to they like the person that wants to buy the house to approach them a certain way. So what is an ideal borrower to you? Like, what do you think if someone do it, it will make your job so seamless?
Well, if they come to me with an 800 credit score and buy $1 million house and put 50% down, that'd be great. I'd like that. But I call those unicorns. You really don't see those in the real world. The ideal client that would come to me would have done a little bit of research and have a documented job history without large gaps in between employment. Started on the path to saving a down payment. That would be great. And just someone that really monitors their credit score and pays attention to it. Just a brief sidetrack into the credit score thing. You can track your score for free through a number of different apps. Credit Karma is one. I would warn people that it does trigger that to have people call you and try to sell you things. And the score that you see on Credit Karma is not the score that I get. So all the time I get people call and say, oh, I've got a 700 score. They do with Credit Karma. That's what's called a consumer score. But there's actually a different algorithm that calculates a score for mortgages. And more often than not, especially with a first-time buyer, the mortgage score is a little bit lower. But what we found is, let's say they think they have a 650 score, and I pull it and it's a 610, and we need a 620 for a conventional loan. Well, they can track that score, and if they see that their score go up through Credit Karma or whatever, my score should go up an equal amount. So we'll set a program where, okay, here's what we need to do. You need to keep paying things on time. And then let's say you have a credit card that you owe, it has a $1,000 limit and you owe $900 on it. Well, as soon as you can, let's pay that card down to under $300, because when you get to under 30% of the limit on that card, it boosts your score, sometimes significantly. I've seen 30, 40-point jumps when someone gets that score or that balance down. So if they come in and they've tracked their score, we know where we're starting, and then we know where we need to go, and I can give the advice on what needs to be done to get to that point.
That's a very good one. That's a very good one. I have a follow-up question. You mentioned it's a good idea to stay in one job. You know, job stability helps a lot, and that it's not a very good idea to leave a job because of 25 cents to another one, especially, you know, within a short period of time. So essentially what you are saying is it's better to stay in one job and do overtime than switching to a new job just because he or she wants to buy a house and the difference is just a little, um, especially when the time frame when, you know, the buyer wants to buy is very close by to, you know, because then what is the implication? I mean, I kind of know
Well,
about to say it.
yeah. And again, that kind of all comes back to uh, talking with me early in the process. And then you can come into me and say, I got this offer. Is this something that I should look at? And it really depends on what the person does. So if it's an hourly job that offers overtime and you've been there for a year, you're better staying with that and maximizing your overtime. Now, if you're a salaried position and you don't work overtime and someone comes along and offers you $20,000 more a year, then take it. So it depends on the situation, and that's why coming to me, I can tell you which situation you're in and what the best way to do it is. But oftentimes with hourly workers, they'll jump to the next job, and then their second job, they may stop that for a little while, so they work full-time and overtime at the new job, and then I've got a gap and I can't use the second job anymore. The biggest problems typically come when we're trying to do income from two jobs and overtime. That's where it gets really problematic. And that's somebody that's working a lot, and they unfortunately sometimes can put themselves in a situation where I have to exclude some of that income.
Yeah, thank you. I've experienced this before, Ahmed, sorry, where a client is, you know, is in a job doing overtime because he's trying to get a home. He gets another job, but because it's now he has two jobs, he couldn't do overtime on the other one, on the first one. So, but his mindset is okay, now I have two jobs, they can use the two. But what he doesn't realize is, or what he did not realize, that they it's too close. Like you guys cannot use, you know, overtime on both sides when the new job. I mean, sorry, you cannot use the two jobs. That's what I meant, because he just got a job and he wants to buy a house with the two jobs instead of staying in that initial job and do a lot of overtime so that you guys can use that overtime.
Right.
So
So
you get, yeah, okay, go ahead.
So here's a perfect example. We have someone that works a job and maybe they're capped at 10 or 15 hours a week of overtime. And they get an offer or they go take a second job where they work maybe 30, 40 hours a week. Then they come to buy a house and they've stopped working the overtime on the first job because they can work 40 hours, maybe at a lower rate, but they can get more hours, which means more money at the end of the day. And then they come to me and it's been less than a year. Well, now I can't use any of the income from the second job. Whereas we would have had on the first job, the base pay plus the overtime. And now since they've stopped working the overtime to take the second job, I can't even use the overtime because we get what's called a verification of employment. And the employer shows us how many hours base pay, how many hours of overtime, and when it was worked. And if they've stopped working overtime, now we're down to just the base pay on the first job, and we've really cut the income significantly.
And that is because the overtime now is not within certain period to when you guys are pulling the information. Is that correct? Because maybe they work overtime like 4 or 5 months ago, but recently they haven't done any overtime at their first job. So you won't be able to use the overtime they've done in like 4 or 5 months ago.
In some cases, we can't use it at all. In other cases, I have to, let's say we're going to close in November and they haven't worked any overtime since May. I can take the overtime that they have year to date and maybe average it out over the whole year, but obviously that reduces the monthly amount. We go off a monthly income. And if they haven't worked it for a number of months, when I stretch that out and divide that total by the number of months in the year, I have less to work with. Yes.
Yeah, I see. Yeah.
Before we go to the next, I'm sorry. Go ahead. Sorry.
Yeah, I know we talk about, first time home buyer, primary residence. I just want to see, do you do investment loan as well? Like, and someone that have their primary residence and want to buy investment property.
Absolutely. It's an interesting market right now because while we've seen great appreciation in home values and we've seen great growth in rents of investment properties, those that own investment properties have done very well because the rents have increased so much. The terms for investment loans have gotten more restrictive and the rates have been higher. But it's still a great investment. I mean, real estate is I think the greatest way to build wealth. And
absolutely,
we do investment property loans. They're different terms than if you do your primary residence. If you buy a house for yourself, you can put as little as 3% down, even 0% if you have a VA eligibility, or you buy what's called a rural housing, USDA property that's kind of outside of the populated areas. They allow for 0 down. For investment properties, technically speaking, you can put down 15%. Now, they've put in place these things called loan level pricing adjustments, LLPAs, and that affects the rate. And what basically it does is it makes a 15% down payment not very practical, because to get any rate, you have to pay 3 or 4 points. And if you're paying that much just in a fee, you might as well just put the 20% down and go with that. But I'm getting maybe a little more technical than is needed. But there's a bigger down payment required for an investment property. You can use, the great thing on investment property is you can use the rent of the property that you're buying to help you qualify. Now, let's say that the property you're going to buy will have a payment of $750 a month. That's probably unrealistic in this world, but just for math purposes. And you're going to rent it for, or the appraiser does what's called a rent schedule. And that tells you what the market rent should be for that property. And if the market rent for that property is $1,000, I can take that number and we're allowed to use 75% of it to offset the new mortgage payment. So if you buy a house that's a $750 payment and the projected rent is $1,000, that wipes it out. So what that allows you to do is buy that house without having to qualify to buy a whole nother house with additional income. The rent offsets the payment rather than you having to make twice as much money to buy a second home. So there are some nice things about investment properties that allow you to qualify based on projected rental income. So for most people, I think the challenge is coming up with down payments to buy subsequent investment properties. What we see people do a lot of the time is They come up with the 20% down, buy a property that they think obviously is a good value, that has an upside to it, and put maybe a little bit into it so that they increase the value, and then they'll come back and refinance it or take money out to get down payment money for the next house after that value has risen.
That's a
Yeah.
good
Ibrahim, sorry, I do have
Sure.
a immediate follow-up question to that. So, do you guys have like a certain amount period of time? So let's say I'm doing a boss strategies, which is buy, rehab, rent, refinance, and repeat. So if let's say I already buy, I already rehab it, I rent it out. Is there any certain amount of time from when I buy it to when I can refinance with you? A lot of people will say 6 months incubation period, 3 months. I just want to know if that applies on your hand and what that timeline looks like.
It does. With conventional loans, actually, it's changed recently. It had been 6 months before you could refinance an investment property loan or even a primary residence loan. So Fannie Mae and Freddie Mac pretty much said, we don't want to churn these loans. We don't make any money if someone refinances them every couple of months. So we won't take a new loan on the same property if it's less than 6 months. Most of the investors out there now have gone to saying, to do a cash out refinance on a property, you have to have had the original financing for 1 year. So definitely something that you need to be aware of. Now, way around that could be going out and getting a home equity line of credit if you need to access your equity faster. I don't know that they have those rules in place, but yes, that's a recent change that you have to, if you finance this house, you have to hold that mortgage for 1 year before you can do a cash out refinance on it.
Oh, okay. Yeah, I actually fall a victim of that. I didn't know. I went out to get a 6 months mortgage to buy a house. Then now I'm like, okay, I can actually get out, but they can only pay for the loan. I'm not doing any cash out refinance.
Correct. Yes, you can do a rate and term refinance.
Yes, which I want to do cash out. So I'm kind of in between right now. But yeah, we can talk about that later. So yeah, Ibrahim, go ahead. Sorry about that.
Yeah, you could. So I just want to quickly go back to the credit because I want to see his opinion about, I've seen situation where, you know, some people cash is king, and this scenario, this person is saving as much as possible, um, as like, maybe, couple of thousand, and he, his thought was, okay, if I have this thousand, um you know I'll be fine, even though the credit is like maybe 530 something to like 516. So what do you think about, I have my own opinion, but you the expert here. What do you think about people trying to save money, but they have late payment, collection, and everything, but you still have, but they don't have the cash, they don't have everything house, cash, but they're just trying to save so they have enough down payment and possibly money to furniture the house, but they forget to take care of the credit, like, so what do you think? Do you think what do you think, is they have to monitor both sides, or do you think credit is even more important if you want to buy house? If you don't, if because I've seen situation where, if you don't have money, you can still buy house if you have great credit. So
Yeah,
what do you?
I think that, well, if it's for their first house and they're unable to save money to put down on a house and pay their bills at the same time, they're not ready to buy. Just, that's the frank answer. The credit needs to be, I think, the first piece. And then you have to have a lifestyle, maybe cut some expenses out, maybe not buy that new car, so that you can live comfortably saving money to pay for that new house. Oftentimes, the house payment's going to be higher than what you're paying in rent. So if you have a situation where you're not able to pay your bills on time while you're renting, if the house payment's higher, you're going to struggle even more. So, no point in putting the money away. And if you have a credit score that's in the mid 500s, I can't get you a loan anyway. So it's interesting. When I first started doing this, if you had a credit score over 600, the rate was the same for everybody. Now, if you have a score of 600 versus someone that has a score of 800, you're going to get a rate of 8.5% and have to pay 2 or 3 points, where the person with the 800 score will get a rate of 7.5 and not pay any points. So you'll pay tens of thousands of dollars more for that loan over time because of your credit score. So I think you have to keep your spending and your credit in order. Penny aside that you're comfortable doing to save up for buying the house. That's my opinion. I don't know that that's the right answer, but that's my opinion.
I think you answer my question because based on what you just explained, that's what I'm feeling, and that's my opinion, that credit is very important. Like, because I see this country as like a credit system.
Yes.
Because in some situation, even when you have money, as long as the money is not up to what they really want, like you may not get that deal, or you may not get what you need. But if you have very great credit, sometimes even when you don't have money, they might still look you as a credible person. Like, okay, like that history is strong and all that. I mean, of course, you have to be working. You have to be, but just having some couple of thousands of dollars, not enough to what they want it to be, and your credit is so messed up.
No, that doesn't work.
Yeah.
Having the credit is the first key piece, because the down payment options that are available, especially on your first home, as little as 3%, and it can be a gift from a family member. That makes that part pretty attainable. But if you come in and your credit's bad, it doesn't help. You're still dealing with a much higher rate. And by the way, let's say your credit's really bad and you had to go out and buy a car. Well, you got your car at 18% interest instead of 6% interest. So you're paying $300 more a month for your car than you should be. And when you go to get your homeowner's insurance, it's $100 a month more than a person with good credit would get. So all of these things snowball to make your debt load too high to buy the house that someone with a good credit score could get.
Yeah. So that's a great answer. So credit is very important. Just don't care
It
about,
is.
a lot of people, I want to save money. Yeah, save money. We want you to save money, but don't forget your credit. Why are you doing that? Make sure you
Right.
pay your debt on time, pay your, I tell people it's better you negotiate a payment arrangement than you let a lender or a creditor take you to collection. Collection is not good
Absolutely.
for anybody. I would rather negotiate. Okay, I'm gonna pay so amount monthly, and if that company accept that, I would rather pay you know instrumental payment. Is better than going to collection, especially when you are trying to approach a lender for loan. um
Right.
we're not trying to scare you guys here. I mean, Mr. Andrew, he has the experience. If you talk to him, he's going to tell you what to do before, you even run into that problem. But we just want you guys to know that it is a good idea to, source out information from the lender, your realtors, or anyone that can help you out. Don't just make your own decision based on what you understand at that moment. There are a lot of information out there that are helpful, but make sure you get it from the right person. That's the
And again, that goes back to talking to somebody early, in the process that can help tell you these things, because there's a lot of things that I think even people with a lot of experience don't realize. For example, we've been talking a lot about a first-time buyer that's maybe an immigrant that doesn't have that deep credit profile, number of years. So, for example, if I am late on a payment, my score will drop maybe 20 points. But I have 8 trade lines. I have a credit card that I've had open with a perfect history for 25 years. So it's buffered by that time. If you're new to this country and you've only had 2 credit cards in your name and you're late on one of them, it could drop your score 100 points because you don't have a deep credit profile that insulates you from that one late payment. So especially when you're new to establishing credit, keeping everything current is vitally important.
Absolutely. Thank you, Mr. Andrew. And real quick, I want to let our audience know if you have any lending question, this is your chance. We have Mr. Andrew on here tonight with us. He has over 25 years of experience in lending. So he can answer your question and he will be able to give you insight into anything that might be bothering you when it comes to lending. So please seize this opportunity and drop your question and we will get it to him and he will be able to answer. So my next question will still go back to investment. I'm really sorry I'm taking us out of
No, I wanted to circle back to it as well. So fire away.
yeah. So my question is now a good time to refinance?
Well, so for an investor, investors look at things differently than people that live in their primary residence. For an investor, it's all about cash flow and the ability, if you can refinance and you might have a higher rate, but maybe it frees up cash through a cash out refinance to allow you to buy another property that increases your cash flow, then yes, that can very much make sense. For a person that's looking at their primary residence, let's say they've been in their house for 3 years and they'd like to lower their payments, they're not going to have the opportunity to do that just looking at the house payment as the sole thing you look at. So let's say they have a house and they have a 3.5% interest rate. And now we're going to be in the mid 7% range. On the surface, that doesn't make sense. And if there's no other reason for refinancing, then they shouldn't be refinancing. However, I had someone the other day call me that's run up $45,000 in credit card debt, and it's all at 29% interest. So they didn't like going from 3.5% to 8% on the cash out refinance. But when we look at what they're paying each month on the credit cards, we saved them $500 a month in total payments. So if you've gotten to a point where your very high interest debt, other than your house, has become a problem, then yes, doing a cash out refinance, even though the rate's higher, is a great opportunity to cut that debt out. And then I'd recommend locking up the credit cards after you pay them off.
Yeah.
So there are times where that makes sense, but more often than not in this market, I'm telling my clients after looking at all the numbers that actually Abraham, someone that we did a loan for last year, called today and asked if we could refinance her house and save some money. Well, she has a 6.5% rate. So no, unfortunately, there's no need to pay other things off. I told her, doing loans is what puts food on the table for my family, but I'm not going to try to talk you into doing a loan when it's not financially in your best interest. So hold tight. We'll watch the market for you. And when the time is right, and it will come, we will refinance that and then save you money. But I find that I get a lot more loans for telling somebody no and explaining to them why. They always come back because they know I'm going to be honest with them and do what's best for them, rather than try to talk somebody into something that's not good for them. People are smart. They figure those things out and then they never come back. So I always find even if you're telling them no, it pays off in the long run.
Yeah, absolutely.
Honesty is a big thing. Since I met you, I've sensed, and I'm still, and I believe I'll keep sensing that integrity. Like you a man of your words. If you say you're gonna do something, you try to do it as much as you can. Even some of the hardest loan I've ever seen, you and your company have got it done. Like it kind of loan that everyone uh thought is dead, like it's not gonna go anywhere. So I respect you and your company for that. So thank you for all you've been doing for the immigrant community, and I'm sure I'm not the only one feeling this way. I mean, a lot of
Well, thank
realtors
you.
out there, they know you guys are, putting the best into your job because you love doing it. My
Well,
question will be,
oh,
okay,
sorry.
go ahead, go ahead.
Oh, I was just going to say, our company, we don't advertise. So if you're not going to be happy, I don't want you to use us. I want you to come out of this process being thrilled and telling your friends. So that's why we don't charge an application fee or anything like that. I want you to be free to do what you feel is best for you. And then as far as the hard loans, yeah, I like the challenge. My mom, when I was very, very young, said I should be an attorney because I like to argue and I don't like to be told no. So I take those as a personal challenge to get them done. And it's funny, after doing this for so long, I now have been in this business longer than most of the underwriters that I'm dealing with, and I'm able to show them how it should work. And that's a great feeling.
Yeah, so it's technically your experience, you always put it into practice on when you are doing your job. So um and it's I can see I've been seeing the results because a lot of loans that I myself, even though I'm not a lender, I have that feeling. There are some things when you see it, you already kind of have that feeling of doubt, like, oh, maybe this will not work. But whenever it comes to you guys, it's like the doubt is kind of when even when I just talk to you, it's like you kind of erase 50% of the doubt, first of all, because you can, when you see it, you've had that experience, you can, you always give me like, okay, oh, okay, yeah, this is kind of be a little tight, but we'll see what we can do. That, but it always give me that impression of, okay, Mr. Andrew got it. Let's see what he's gonna do to this. And I've seen, I haven't mentioned, this. I don't have like a data to measure all the rate, but the success rate with all the loans that I bring to Langdon Mortgage, like my client, the success rate is very high. Like one day I have to sit down and write it down. It's like almost all the loan has been done. Like trust me, I'm really, I feel happy. Like okay, I have a lender that will take care of my client because most of the immigrant community, there's one or two challenges that you have to.
Sure.
You and I have talked about this before, where we have to find a way to kind of help educate and kind of prepare people for for mortgage, before before they actually take that step to really sign the deal and everything. So
Let me
you
interrupt you for 1 second, if I may.
right.
I can't let you say that without saying you do a great job of making my job easier,
Oh,
because I think having a really good realtor is so important. And you have taken the time not just to learn about real estate, but you know more about the mortgage side of things than a lot of realtors out there. In
oh,
fact,
thank
most
you.
of them. And
I
so
appreciate it.
that's why working with somebody with experience is so key, because, and I'd like to think that you know your stuff and you think that I know my stuff, and that's why we work well together. Whereas if someone goes out and just, anybody can be a realtor. And there's realtors, I'm working with someone right now that they started with someone who had 15 years of experience and went with their daughter's boyfriend who has sold 2 houses in his career. And we're having all kinds of problems because he didn't even know how to fill out the contract right, let alone know about financing. So I encourage everybody that's looking to buy a house, call an experienced realtor. Obviously, I would recommend calling Ibrahim. He does a fantastic job and he guides his
Oh,
clients through the
really.
process so well. It makes my job easier, and I can't thank you enough for that.
Thank you, sir. Thank you. Really appreciate that. I I guess my wife will be, if she's not watching, she watches later and she'll say, "Oh, Mr. Andrew, he's saying all this good stuff about you." I mean, I appreciate that dearly.
That's
Okay,
all
my
true.
question. Yeah, I really appreciate it. I try my best. I always try to put my best into what I do, and I love real estate. So I'm happy to be helping people in our community. My question will be: do you guys typically service your loan, or you partner with other company?
We do not service the loans, and I'm going to just branch off of that for just a second because I think this is worth noting. So in the lending world, you have a couple different entities. So you have a broker, and a broker can send your loan off to anybody, and that's their advantage. They can shop it around and look for the best rate. The disadvantage that a broker has is that they're just kind of a middleman. They pass everything on, and they have nothing to do with the process of approving or funding the loan. On the other end of the spectrum, there's a bank, and the bank only has their products. It has to fit into their box that they have, and they may or may not be the best rate, but they do control the process. And in the middle, there's a few of us, and we're called a correspondent lender. And so what we do at Langdon Mortgage Company is we take the application, we send it to underwriting, we actually close the loan and fund it in our name. Now, that gives us control over the process. If I get something that's clear to close the day before closing, I can get those funds out and get it closed, whereas a broker would have to wait 3 or 5 days. So that gives us a competitive advantage, as well as we get a little bit better rates than the brokers get, because we're selling off to a bigger investor a completed loan. They don't have to do any of the work. They just buy the loan from us. So our rates are good too. So I like that flexibility that we have and control over the process. We're not big enough, though, to hold those loans and service them. So we have a select number of investors, 5 at the moment, that we sell to, and we've worked with them for 30 years. So oftentimes you close the loan with us, and by the time you make your first payment, you get a letter that says your loan is now being serviced by Flagstar Bank. Flagstar's out of Michigan. I know the top executives at the company. If you ever have a problem, I can call them. So holding the loan and servicing the loan is not that big of a deal, because I'm always still here to help. It used to be in the old days, long before you were ever in this business, you'd go to the bank and you'd talk to Bob, and Bob would approve your loan, and you'd go in and you'd pay Bob at the first of every month. And if you had a question, you'd call Bob. Well, there's no Bob anymore. Loans, even if you go to a bank that services their own loans, they then bundle them up and sell them as packages of securities to other entities. So there's no one place that your loan stays anymore in this world. So the next best thing, in my opinion, is that you can come back to me and I'll help you with that. Most lenders will just say, people that do what I do would say, no, call the servicer and ask them. I like to help people when I say, come back to me and I'll help you find the answer, because I want them to stay in contact with me and keep in touch. And then they'll come to me when they go to buy their next house. It keeps my name in their mind. So the work that I put into helping with things on the back end is well worth it. And truly, there's not usually any problems. It's every once in a while there's a question on escrows, the property taxes change or the homeowner's insurance, or sometimes something gets messed up, but we're able to track it down and fix it pretty quickly.
Thank you. Thank you so much, Mr. Andrew. I am enjoying this, honestly, and I 100% believe that our audience is going to love this. This is a video that we will, for some time now, we will be referring our audience to go back and watch, just so to prepare them to make sure before they come to you, they have all their stuff together and they make everything easy for them and for you as well. So my next and final question will be, I know we kind of explain, people giving you calls on time earlier before the process starts, having a, stable work, quality income, and the right papers, like the right to work, permanent residence, or even be a citizen of the US, as well as credit. One thing that I think we kind of miss is like explaining what debt to income ratio is and how it affects home purchases. Can you kind of give us what that is and how it affects?
Absolutely. In fact, I had a note to touch on that, and we kind of kept moving on. Debt to income is one of the key things that is taken into consideration along with credit. So what debt to income means, if you think about it, is really just what your debt is in relation to your income. And the formula is, it varies if it's a little different with FHA versus conventional, but more or less you can spend between 45 and 55% of your income on your house and your other monthly debt. So, and that's your gross income, not what you bring home. That's before the taxes come out. So if you make $4,000 a month gross, you can spend $2,000 on your house and your credit cards and your car and any other debt. Student loans are a big one because they're now coming back into play.
Yeah.
So that shows why keeping your monthly other debts in line really lets you buy a lot more house. Because let's say you go buy a car, and I had someone the other day that was a new one for me, had $2,300 a month in car payments between two cars. Well, that's a huge amount. And
Wow.
if they didn't have those car payments, that $2,300 a month would probably let them buy an additional $300,000 in house, because car payments are on a shorter period of time, so the monthly payment's higher. So debt to income is definitely something we need to look at. And unfortunately, in this market, with rates going up, that's really limited what people can buy. Someone that could, at a 45% debt to income ratio 3 years ago, could have bought, let's say, a $400,000 house. Today, it's probably $300,000 because the interest rates are higher. So even more reason for someone to, especially if they want to buy that next house, don't go buy a new car. You can always buy a new car later. You'll always get approved for it. Keep your debt low, because you want to be able to buy the most home that you can comfortably afford. If you have to buy a smaller house than what works for your needs, you're going to find yourself selling it before too long and probably not having the chance to appreciate and make money on that house. So put yourself in the best position to buy the most house that you can comfortably afford, and put that car off for maybe one more year.
Mr. Andrew, thank you
Absolutely.
for thank you for talking about this car and a house, because I remember I've told one of my clients before that if you are so, because she said she really wants to buy this car because she needs a car. The car, she has one, and the car has been given out in a lot of trouble and all that. So I told her, okay, you know what, if you can put this car aside, just like the plan, put it aside for a minute, get this the day you get the key. If you go to the dealership, you're still gonna buy that same car.
Right.
If you buy that car first, even if it's no matter what, because the criteria, the way the mortgage, the way you guys check credit and information is way sophisticated, more sophisticated than car dealership. Like,
Right.
I'm not saying they don't check, but it's not like mortgage.
No, we check right before closing that your job is still the same and that your credit is still the same. So don't think you can sneak out the day before closing and buy
Yes,
that car, because we'll find
yes.
out.
Yeah. No, I told them like after. What I'm saying is, if that person buy the car before the mortgage, she probably won't get it. But
Right.
she got the key to the house after she closed, and she went for the car, and she still get the car.
Right. Yep. Just wait until after you close, and then you're
Yes,
fine.
but if she had
Yeah.
done that, like go for car first, she probably wouldn't get the same house because the
That's
ratio
right.
will be off.
Yeah.
So yeah, so I mentioned that because yeah, I really it happens, and the
It
person did
does.
that, and she still got a car, but it was after she got a key to the house. So
Yeah.
yeah, that's a good one.
Uh,
Mr. Andrew, if they want to reach out, oh, go ahead, man.
Yeah, I just want to mention something real quick, Ibrahim. Sorry, and it's not just putting off the ratio. Honestly, it's like wasting the efforts of all everybody that has been helping before they get to like getting clearing on closing, because now the ratio is off. Everything needs to be thrown away, and the calculation needs to start all over again. And
Yes.
it's really frustrating. It can be. So I totally agree, and I know what the feeling is like.
And it all goes back again. If we start talking early and we keep open lines of communication, we can avoid these things from being a problem.
Absolutely,
Yeah.
absolutely.
But I'll be honest with you guys. With Langdon Mortgage, things like that, they know how to handle it. Like they don't just because your ratio change and they won't show you bad attitude or like, they understand life happen, things happen. But you don't want to go through that, that route. You don't want to experience that unpleasant situation where they'll tell you, oh, unfortunately, because of what you have done, you can't get a loan. I'm sure they will guide you through the process. If you can ask question, do it before you actually go for the car. That way you don't face this same problem. I mean, your emotion is already there. You want to get the house, your family, everybody's waiting for it. So the least thing you want to do is to mess everything up just because you want to get a brand new car. Wait, get your key first for the house. Get the key to the house first. Then you can now go for your car after that, not in the process of getting a house. So, Mr. Andrew, how can they reach out to you? Because, probably some people watch this video and they will have questions. And how can they reach out to you?
And I'm happy to answer any questions, and I'd welcome their calls, even if we're not looking at doing a loan. If it's just basic questions, I'm happy to help. My cell phone is 317-627-2290. And my email is andrew@langdonmortgage.com. And that's LANGDONMORTGAGE. And yeah, I'd be more than happy to help. I find even if they're not in a position to buy a house or not ready, if I can help them answer their questions, the word spreads, and that's what makes my little world go around.
Yeah, absolutely. Ibrahim, if anybody wants to reach out to you, we've talked a lot about many stuff tonight. So people might, have question, have realtor, that they need realtor help. How can people reach out to you?
Yeah, they can call me. My phone number 317-728-0213. You can go to, IB Realtors on Instagram and DM me, IB Realtor the US on Facebook. Just send me a message. Let me know your questions, your concerns, and we'll go from there. Ahmed,
Yep. You can reach out to me at official Ahmed Lawal on Instagram. My number 317-531-9685. Just DM me anything off market, fixer upper you want to buy investment property. I'm always, actively doing that and doing it. That's my bread and butter. So yep, feel free to reach out. Mr. Andrew, it's been a pleasure. I honestly learn a lot. You and I need to connect after this, obviously, because I have some other lending questions that I might want to ask. But yeah,
Sure.
thank you for coming. We really appreciate your time, and we absolutely believe that our audience enjoying this session. We will be reaching out to you whenever we need or we have any lending question. Thank you so much.
thank you,
Well, I
sir.
appreciate you having me. It was really fun, and I enjoyed doing this, and I hope it helps.
Thank you,
Yeah,
sir.
it
Thank you so
does.
much. Okay. Ahmed. Ahmed.